Question 1. Which of the following is a key responsibility of the Washington State Insurance Commissioner? A. Setting the premiums for health insurance policies. B. Administering the Affordable Care Act provisions. C. Enforcing regulations to prevent unfair claims settlement practices. D. Approving insurance policies for all insurance companies. Answer: C. Enforcing regulations to prevent unfair claims settlement practices. Explanation: the Washington State Insurance Commissioner plays a critical role in overseeing the operations of insurers in Washington. A primary responsibility includes ensuring that insurance companies follow fair claims practices as outlined in the Fair Claims Settlement Practices Act. This act is designed to protect consumers from unfair treatment by insurers during the process. Options A and B are not responsibilities of the insurance commissioner. Setting premiums A is typically done by insurers, and the account B is a federal law, not managed directly by the commissioner. Option D is incorrect because while the commissioner ensures insurance policies comply with laws, approval of individual policies is not part of the commissioner's duties. Question 2. Mr. Smith is an insurance broker who has been found to be providing misleading advice to clients in order to earn higher commissions. Based on Washington's insurance regulations, what should the insurance commissioner do in this situation? A. Suspend Mr. Smith's license for a minimum of 6 months. B. Require Mr. Smith to undergo additional training on ethical insurance practices. C. Issue a warning and let Mr. Smith continue working. D. Revoke Mr. Smith's license and impose fines. Answer: D. Revoke Mr. Smith's license and impose fines. Explanation: under Washington state regulations, specifically the Insurance Code of Ethics and Professional Conduct, any insurance professional found guilty of misconduct, such as providing misleading advice to earn commissions, is subject to disciplinary action. Since Mr. Smith's actions are unethical and violate the fiduciary responsibility he owes to his clients, the insurance commissioner has the authority to revoke his license. In addition to revocation, fines can be imposed as per the state's penalty guidelines for such violations. Option A is incorrect because suspension is typically less a penalty for certain violations, while option B doesn't address the severity of the violation. Option C is not sufficient response to the unethical behavior outlined in the scenario. Question 3. A Washington-based insurance company is submitting its rate filing for approval. The company's proposed rates seem to be significantly higher than the market average. According to Washington state insurance regulations, which of the following actions must the insurance commissioner take? A. Approve the rate filing automatically if the company has strong financial history. B. Reject the filing and require the company to lower its rates to match the market. C. Review the filing to ensure it complies with regulatory standards for rate adequacy and fairness. D. Approve the filing if the rates are within the company's target profit margin. Answer: C. Review the filing to ensure it complies with regulatory standards for rate adequacy and fairness. Explanation: in Washington, the insurance commissioner is required to review rate filings to ensure they are reasonable, adequate, and not discriminatory. This includes ensuring that rates are neither excessively high nor insufficient to cover the company's liabilities. The rate filing and approval procedures must meet standards for fairness and consumer protection. Option A is incorrect because automatic approval isn't given based on financial history alone. Option B is incorrect because the commissioner cannot arbitrarily reject the filing without thorough review. Option D overlooks the regulatory requirement to ensure fairness and adequacy beyond the company's profit margins. Question 4. Which of the following best describes the primary purpose of the Washington State Insurance Guarantee Association? A. To provide insurance coverage for clients whose insurers have become insolvent. B. To regulate and approve insurance company mergers. C. To issue temporary licenses to insurance professionals during emergencies. D. To fund state programs for insurance fraud prevention. Answer: A. To provide insurance coverage for clients whose insurers have become insolvent. Explanation: the Washington State Insurance Guarantee Association (WIA) is designed to protect policyholders in the event that an insurer becomes insolvent. It ensures that claims are paid up to certain limits, helping consumers avoid financial hardship when an insurer can no longer meet its obligations. Option B refers to regulatory oversight, which is not the function of WIA. Option C refers to licensing, which is handled separately by the insurance commissioner. Option D pertains to fraud prevention, which is a separate focus outside the Guarantee Association's scope. Question 5. What is the maximum penalty the insurance commissioner in Washington can impose for a violation related to unfair claims settlement practices? A. A fine of up to $1,000 per violation. B. Suspension of the license for up to 1 year. C. A fine of up to $25,000 per violation. D. A written reprimand with no fine. Answer: C. A fine of up to $25,000 per violation. Explanation: under Washington's Unfair Claims Practices regulations, the insurance commissioner has the authority to impose significant penalties for violations related to unfair claims practices. The fine for such violations can be up to $25,000 per violation as outlined in the regulations. Option A is incorrect because the fine for individual violations can be much higher. Option B is incorrect since suspension is not the primary penalty for unfair claims practices, which typically results in financial penalties. Option D is incorrect because reprimand alone is insufficient for such serious violations. Question 6. Which of the following is a key responsibility of a licensed insurance producer in Washington state under the state's consumer protection laws? A. To ensure that the premiums paid by the consumer are the lowest available in the market. B. To disclose any conflicts of interest that may affect their recommendations to the consumer. C. To accept all claims submitted by their clients without the need for an investigation. D. To limit the consumer's options to only the policies they offer. Answer: B. To disclose any conflicts of interest that may affect their recommendations to the consumer. Explanation: in Washington, licensed insurance producers have a responsibility under the consumer protection laws to disclose any conflicts of interest that may impact their advice or recommendations. This ensures transparency and protects consumers from being misled. Option A is incorrect because while producers should offer competitive options, they cannot guarantee the lowest premiums. Option C is incorrect since producers are not responsible for accepting claims as that is an insurer's role. Option D is not correct as insurance producers are required to offer suitable options based on a client's needs, not limit their choices. Question 7. Mr. Taylor, a licensed insurance agent, fails to renew his license on time. What should the Washington Insurance Commissioner do in this situation? A. Automatically issue a temporary license until the agent renews. B. Extend the grace period for renewal without penalties. C. Issue a penalty and require the agent to pay a fee to reinstate the license. D. Revoke Mr. Taylor's license immediately. Answer: C. Issue a penalty and require the agent to pay a fee to reinstate the license. Explanation: in Washington, late renewal of an insurance license typically results in penalties, including fees for reinstatement. The insurance commissioner can issue penalties, but will allow the agent to reinstate the license upon payment of the required fees. Option A is incorrect because temporary licenses are not automatically issued without the renewal process being completed. Option B is incorrect because grace periods are not extended without consequences. Option D is incorrect, as revocation typically occurs due to more severe violations, not simply late renewal. Question 8. A company offers insurance policies in Washington state but is not authorized to do so by the insurance commissioner. This company is engaged in which of the following activities? A. Operating in compliance with the Washington State Insurance Code. B. Practicing fraudulent insurance activities. C. Violating the insurance licensing law. D. Providing services as a non-resident producer. Answer: C. Violating the insurance licensing law. Explanation: in Washington, all insurance companies must be licensed by the insurance commissioner to legally offer policies within the state. If a company is selling insurance policies without this license, it is in violation of the insurance licensing law. Option A is incorrect because unlicensed insurers are not in compliance with the state's regulations. Option B refers to fraudulent activity, which is a more severe accusation and would require additional evidence. Option D applies to individual producers, not companies. Question 9. Which of the following is true regarding insurance fraud prevention in Washington state? A. Insurance companies are required to report suspected fraud only when a claim exceeds $10,000. B. All insurance professionals must complete anti-fraud training as part of their continuing education. C. Only the insurance companies, not the agents or brokers, are responsible for fraud prevention. D. Reporting fraud is optional for consumers in Washington state. Answer: B. All insurance professionals must complete anti-fraud training as part of their continuing education. Explanation. Washington law mandates that all insurance professionals must complete anti-fraud training as part of their continuing education requirements. This helps ensure that the insurance industry actively works to prevent fraud. Option A is incorrect because the threshold for reporting fraud is not limited to claims exceeding $10,000. Option C is incorrect because fraud prevention is a shared responsibility between insurers, agents, and brokers. Option D is incorrect because reporting fraud is not optional. It is required under Washington's insurance fraud prevention laws. Question 10. Which of the following best describes the role of insurance producers in Washington under the Fair Claims Settlement Practices Act? A. To settle claims on behalf of the insurance company. B. To advise the insurer on claims resolution strategies. C. To act as intermediaries between consumers and insurers during the claims process. D. To provide final approval for claims payouts to policyholders. Answer. C. To act as intermediaries between consumers and insurers during the claims process. Explanation. Insurance producers in Washington are not authorized to settle claims directly but serve as intermediaries between the consumer and the insurer. They help facilitate communication, ensuring that claims are handled according to the Fair Claims Settlement Practices Act. Option A is incorrect because settling claims is typically handled by adjusters or the insurer directly. Option B is not the producer's role under this act. Option D is incorrect because producers do not have authority to approve claim payouts. This is the insurer's responsibility. Question 11. Which of the following is true regarding the cooling-off period for life insurance policies in Washington state? A. The cooling-off period is 30 days. B. The cooling-off period is 10 days for most life insurance policies. C. There is no cooling-off period for life insurance policies. D. The cooling-off period only applies to individual health insurance policies. Answer. B. The cooling-off period is 10 days for most life insurance policies. Explanation. In Washington state, most life insurance policies provide a 10-day cooling-off period during which the policyholder can cancel the policy for a full refund. This allows the consumer time to review the terms of the policy. Option A is incorrect as the cooling-off period for life insurance is 10 days, not 30. Option C is incorrect as the cooling-off period is mandated for most life policies. Option D is incorrect because the cooling-off period applies to life insurance, not just health insurance. Question 12. Under Washington state law, which of the following is required for an insurance company to terminate a policy due to non-payment of premiums? A. A 10-day notice of termination must be sent to the policyholder. B. The insurance company must offer a 60-day grace period. C. The policyholder must receive a 45-day notice of non-payment. D. The insurer must refund any unearned premiums to the policyholder. Answer. B. The insurance company must offer a 60-day grace period. Explanation. In Washington, insurance companies are required to provide a 60-day grace period for non-payment of premiums. If the policyholder fails to pay it within this period, the insurer may cancel the policy. Option A is incorrect as a 10-day notice is not sufficient for termination due to non-payment. Option C is incorrect as a 45-day notice is not mandated. Option D is unrelated to the notice requirement but generally applies to policies after cancellation. Question 13. Which of the following statements regarding the licensing of insurance agents in Washington state is correct? A. Insurance agents in Washington must renew their license every 3 years. B. Insurance agents in Washington do not need continuing education for license renewal. C. Agents must pass an exam every time they renew their license. D. Insurance agents in Washington must have a minimum of 2 years of experience before applying for a license. Answer A. Insurance agents in Washington must renew their license every 3 years. Explanation. In Washington, insurance agents must renew their licenses every 3 years. This renewal requires continuing education but does not require it taking the licensing exam. Option B is incorrect as continuing education is required for renewal. Option C is incorrect since agents do not need to retake the exam for renewal. Option D is incorrect as Washington does not require 2 years of experience for license eligibility. Question 14. A policyholder in Washington state wishes to file a complaint against their insurer. Which of the following should the policyholder do first? A. Contact the insurance commissioner's office directly. B. File lawsuit against the insurer in court. C. File complaint with local consumer protection agency. D. Contact the insurer's claims department or customer service. Answer: D. Contact the insurer's claims department or customer service. Explanation: the first step for policyholders should be to contact the insurer's claims department or customer service to resolve any issues. If the matter is not resolved, the policyholder can escalate the complaint to the insurance commissioner. Option A is incorrect because contacting the insurer first is typically the most effective step. Option B is premature and not the first course of action. Option C is an option after failing to resolve the issue directly with the insurer. Question 15. Which of the following actions is a violation of the Washington State Insurance Fair Conduct Act? A. A policyholder submits a claim for an accident that occurred outside of the policy's coverage period. B. An insurer delays payment of valid claim without reasonable explanation. C. An agent discloses policyholder's personal information to third party with the policyholder's consent. D. An insurance company refuses to provide coverage for pre-existing condition in health policy. Answer: B. An insurer delays payment of a valid claim without a reasonable explanation. Under the Insurance Fair Conduct Act, insurers are prohibited from engaging in unreasonable delays in paying claims without a valid reason. Option A refers to a policyholder filing a claim outside the policy's coverage, which is not violation of the law. Option C is acceptable if done with the policyholder's consent. Option D is not violation of the law in health insurance, as exclusions for pre-existing conditions are allowed under certain circumstances. Question 16. Which of the following would not be considered unfair discrimination in Washington State's insurance laws? A. Charging higher premiums for drivers under 25 years of age. B. Denying coverage based on person's race or national origin. C. Offering discount for customers with clean driving record. D. Offering different premium rates based on an applicant's credit score. Answer: C. Offering a discount for customers with a clean driving record. Explanation: in Washington, offering a discount to customers with a clean driving record is not considered unfair discrimination. It is a standard practice in the industry to reward safe driving. Option A could be considered unfair if it doesn't align with state laws on age discrimination. Option B is always prohibited and violates discrimination laws. Option D may be permissible, but only under specific conditions and with proper disclosure. Question 17. In Washington State, what is the primary purpose of the Washington State Insurance Commissioner's Office? A. To promote the sale of insurance policies. B. To regulate insurance companies and protect consumers. C. To provide insurance to low-income individuals. D. To offer legal services to insurance companies. Answer: B. To regulate insurance companies and protect consumers. Explanation: the primary function of the Washington State Insurance Commissioner's Office is to regulate the insurance industry and protect consumers by ensuring compliance with state laws and regulations. Option A is incorrect because the Commissioner regulates, not promotes insurance. Option C is incorrect as the office does not provide insurance but regulates insurers. Option D is not the Commissioner's role. Question 18. Which of the following actions can the Insurance Commissioner in Washington State take if an insurance company is found to be insolvent? A. Request a state loan to bail out the company. B. Take control of the company's assets and operations. C. Guarantee payments to policyholders in full. D. Automatically approve the company's merger with another insurer. Answer: B. Take control of the company's assets and operations. Explanation: if an insurer is found to be insolvent, the Insurance Commissioner has the authority to take control of the company's assets and operations in order to protect policyholders and creditors. Option A is incorrect as the state does not provide loans to bail out insurers. Option C is not guaranteed, though the Washington Insurance Guarantee Association may provide some coverage. Option D is incorrect as mergers are not automatic in such cases. Question 19. Which of the following is considered an unfair trade practice in Washington state insurance laws? A. Discriminating based on a person's marital status. B. Offering different rates based on occupation. C. Offering policies with different coverage limits. D. Discriminating based on person's sex or gender. Answer: D. Discriminating based on a person's sex or gender. Explanation: discrimination based on sex or gender is considered an unfair trade practice under Washington state law. Insurance companies must provide equal opportunities for coverage regardless of gender. Option A is incorrect as discrimination based on marital status is generally allowed in certain contexts. Option B is also not typically prohibited unless it is deemed unreasonable or unrelated to risk. Option C is not violation as different coverage limits are common in the market. Question 20. In Washington state, an insurance agent must inform a policyholder about the availability of the State Life Insurance and Disability Insurance Guarantee Association when A. the policyholder purchases a life insurance policy, B. the agent receives a complaint from the policyholder, C. the insurer is experiencing financial difficulties, D. the policyholder cancels their policy. Answer A. The policyholder purchases a life insurance policy. Explanation. In Washington, insurance agents are required to inform the policyholder about the State Life Insurance and Disability Insurance Guarantee Association when they purchase a life insurance policy. This association helps protect policyholders in case an insurer becomes insolvent. Option B is incorrect, as this is not required when receiving complaints. Option C is incorrect because it is not required during financial difficulties unless specific conditions apply. Option D is not the correct scenario for informing about the Guarantee Association. Question 21. An individual applies for health insurance in Washington and is denied coverage due to a pre-existing condition. What must the insurer provide the individual? A detailed explanation of the pre-existing condition. B. A 30-day period to appeal the decision. C. A list of other insurers who might approve the policy. D. Information on how to apply for Medicaid. Answer A. A detailed explanation of the pre-existing condition. Explanation. If a health insurer in Washington denies coverage due to a pre-existing condition, they must provide the individual with a detailed explanation of the condition that led to the denial. Option B is incorrect, as a 30-day appeal period is not required under all circumstances. Option C is not required by law. Option D is incorrect because insurers do not have to provide information about Medicaid options. Question 22. What is the primary focus of Washington State's Insurance Fraud Prevention Act? A. To prevent false claims from being filed against insurance companies. B. To increase insurance premiums for high-risk policyholders. C. To provide coverage for individuals involved in insurance fraud. D. To create a database for tracking insurance claims history. Answer A. To prevent false claims from being filed against insurance companies. Explanation. The Insurance Fraud Prevention Act focuses primarily on preventing false claims and other forms of fraudulent activity within the insurance industry. Option B is incorrect, as the Act is not aimed at raising premiums. Option C is incorrect, as the Act is focused on fraud prevention, not providing coverage. Option D is incorrect, as the Act does not deal with claim history databases directly. Question 23. Which of the following is the responsibility of an insurance agent in Washington state when they sell a life insurance policy to a consumer? A. To provide a free health exam for the policyholder. B. To ensure that the policyholder understands the terms and coverage. C. To provide a legal review of the policy before the consumer signs it. D. To guarantee the policyholder's claims will be approved. Answer B. To ensure that the policyholder understands the terms and coverage. Explanation. An insurance agent in Washington state must ensure that the policyholder understands the terms and coverage of the life insurance policy before it is sold. This is part of the agent's duty to provide clear and honest information. Option A is incorrect because the agent does not provide medical exams. Option C is incorrect, as it is not required for the agent to provide a legal review of the policy. Option D is incorrect because agents cannot guarantee claims approval. Question 24. Under Washington state law, which of the following would be considered an unfair practice in the solicitation of insurance? A. Offering a policy that is suitable for the consumer's needs. B. Using misleading or deceptive advertising to promote policy. C. Providing accurate and truthful information about the policy. D. Offering discount for bundling multiple policies. Answer B. Using misleading or deceptive advertising to promote a policy. Explanation. Using misleading or deceptive advertising to promote an insurance policy is considered an unfair practice under Washington law. The state requires insurers and agents to be transparent and truthful in their advertisements and marketing efforts. Option A is incorrect, as offering a suitable policy is the goal of good practice. Option C is correct practice, and option D is not considered unfair as long as the discount is offered transparently. Question 25. When an insurance company in Washington state decides to non-renew a homeowner's policy, what is the required notice period? A. 15 days, B. 30 days, C. 60 days, D. 90 days. Answer: C. 60 days. Explanation: in Washington state, an insurer must provide at least 60 days notice before non-renewing homeowners' insurance policy. This gives the policyholder time to find alternative coverage. Option A is incorrect, as 15 days is not the required notice. Option B is incorrect, as the notice period is 60 days, not 30. Option D is also incorrect, as 90 days is not the mandated notice period. Question 26. Which of the following is a requirement for an insurer offering long-term care insurance in Washington state? A. The insurer must offer a lifetime benefit option. B. The insurer must provide a 30-day free look period for policyholders. C. The insurer must provide a waiting period of at least 1 year before benefits begin. D. The insurer must guarantee that rates will not increase. Answer: B. The insurer must provide a 30-day free look period for policyholders. Explanation: under Washington state law, insurers offering long-term care insurance are required to provide a 30-day free look period during which the policyholder can review the policy and cancel it for a full refund. Option A is incorrect because offering a lifetime benefit option is not mandatory. Option C is incorrect, as the waiting period for long-term care insurance is not specified to be at least 1 year. Option D is incorrect because rate increases are possible, but the insurer must follow specific guidelines. Question 27. Which of the following actions is considered a violation of the Washington state insurance laws regarding discrimination? A. Charging higher premiums for individuals with a history of car accidents. B. Offering low premiums for individuals who maintain good health. C. Charging different rates for men and women for life insurance. D. Offering discounted rates for non-smokers. Answer: C. Charging different rates for men and women for life insurance. Explanation: it is considered discriminatory in Washington state to charge different rates for men and women for life insurance. Discrimination based on sex, gender, or other protected characteristics is prohibited. Option A and B are not violations, as they are based on risk-related factors such as driving history and health. Option D is also not a violation, as non-smoking discounts are permitted in life insurance policies. Question 28. In Washington state, when can an insurer cancel a health insurance policy due to a material misrepresentation made by the policyholder? A. Only within the first year of coverage. B. Anytime during the first 2 years of coverage. C. Only if the misrepresentation was made knowingly. D. Anytime during the first 5 years of coverage. Answer: B. Anytime during the first 2 years of coverage. Explanation: in Washington state, insurers can cancel a health insurance policy due to a material misrepresentation made by the policyholder within the first 2 years of coverage. If the misrepresentation is discovered within that period, the insurer may cancel the policy. Option A is incorrect, as the 2-year period applies. Option C is partially correct, but the insurer can cancel for material misrepresentation, whether intentional or not, within 2 years. Option D is incorrect because the cancellation period is 2 years, not 5. Question 29. Which of the following would not be considered a duty of an insurance producer agent in Washington state? A. Providing the insurer's financial stability ratings to the consumer. B. Recommending the most affordable policy for the consumer. C. Ensuring that policyholder receives copy of the policy. D. Acting in the best interests of the consumer while selling the policy. Answer: B. Recommending the most affordable policy for the consumer. Explanation: while an insurance producer agent has a responsibility to act in the best interest of the consumer, recommending the most affordable policy is not specifically a duty. They must provide appropriate coverage recommendations, but cost is just one factor. Option A is correct, as agents should disclose the financial stability ratings of insurers. Option C is a duty, as the agent must ensure that the policyholder receives a copy of the policy. Option D is a duty, as well, as agents must act in the best interest of the consumer. Question 30. Which of the following is a requirement for obtaining a non-resident insurance license in Washington state? A. The individual must pass the Washington state insurance exam. B. The individual must be licensed in their home state. C. The individual must be employed by a Washington insurance company. D. The individual must reside in Washington state. Answer: B. The individual must be licensed in their home state. Explanation: to obtain a non-resident insurance license in Washington state, the individual must already be licensed in their home state. Washington offers non-resident licensing to agents who meet the qualifications of their home state. Option A is incorrect because passing the Washington exam is not required for non-resident agents. Option C is incorrect as being employed by a Washington insurer is not necessary for obtaining a non-resident license. Option D is incorrect because non-residents can be licensed in Washington.